Welcome to the Trading Lounge and the Day Ahead Report, and here we're looking at the S&P 500, and I think we're just about at the top of the of that wave 3 there that we're looking at. There may be a little tiny push higher through here in looking at 5 waves up through here. But look, expect an A and a B and a C correction coming down to the 4th wave of 1 lesser degree, which would actually be to here at 1537.38. That's what they do. The other side to this would be the 38.2 retracement level of wave 3 here, and wave 3 I think it can go a little bit higher, so that would still bring it in around the correct amount here, the 38.2, which a wave 4 does, so I'd just better put that there. So that's an important factor, and that will obviously show up across the other markets as well. And what this means also too in terms of the levels is that the 50 here is the midpoint sub-levels, 10, 20, 30, 50, just sub-levels. So 5 being the second strongest number. So this appears to be a little 4th wave in here, because we've got here the 1, the 2, the 3, the 4 across here, and the 5th wave up through here. So we should see some sort of A, B, C here, which would also sort of line up with the weekly cycle as well, because Monday is seen as a bull day, especially if Friday's been the being the higher close. So Tuesday is normally profit taking in the morning. The trend can resume in the afternoon. Wednesday is a V-shaped day, so it's like a sort of little bit like a Tuesday, but just a bigger version, with Wednesday creating the high for the week. So that would be the this. If there was another little tiny wave up through here, then that would help create that. And then Thursday being the bear day through here. So, but this move down from wave 3 to 4 here could be rather complicated, because when wave 1 to 2 is simple, like this little ABC here is simple, that means wave 4 here can be sideways and complex. So a minimum of a 3-wave swing here would be the most simplest. Triangles normally occur in wave 4s and double zigzags and so forth, but anyway, we'll track that through there, so we can that's what we can expect. So we can expect a complicated correction through here, which obviously will take out a lot of stops in, if you're trading other markets, and that's what Wednesday and Thursday tend to do. So sometimes it's best to nab a little bit more extra sort of profit if you've got those long trades there, and to protect things a little bit. The same for the Dow Jones as well through here as well. In terms of, I think there is, as mentioned, because we'd be looking for a little 5-wave structure here. So I think this is the top of a 3rd or 4th. We'll see the 5th here, and then we'll see the A coming through to here. The B wave will also be in 3 waves going up through here, and then the C wave in 5 waves coming down through here to the wave 4 of 1 lesser degree through here. So we need to sort of consider that there. So once that's complete, then we can see a push to the upside through here up into the 14,500 here. But as I mentioned, coming up here, there will be at the 144 here, and it won't be the end of it as well. This is just the first little sort of interlude, I guess, with this number here. But look, we'll see this say its piece, and then move further to the upside through here. But the S&P 500, if I can just come back here a little bit as well, we do expect it sort of higher. We do expect it up around the extension is around the 1600 here. I was kind of looking at that's the 1.618 extension. The sort of target I was looking at is 6168 here. That's kind of what we're sort of looking at through here. But A good correction on top of the 1550 here pretty much brings that 1600 in there, but of course there will also be subgroup 2 here, so that will be 1565 or the 65 and the 72 here, and of course the 8 profit taking number here, so that's group 2 here, so that's going to be the resistance within the next resistance basically anyway. So, but we are looking up around that 1600 there in the bigger picture to finish the larger 5-wave structure to the upside. So we'll talk about that perhaps next time. The European markets are the same, same but different, but this is the DAX here, and look, quite simply, we're working with 8,000 here. Number 8's a profit-taking number. We'll see a few things here, but you can basically see that we've got wave 1 here, wave 2 to here. This wave 3, this can be counted in a couple of different ways here, but we could even see a little first high above the level there for that there too, because we've got the 1, the 2, the 3, the ABC for the 4th there and the 5th here. But it's going to create some high above here and then have a larger correction here. So we'll just watch that sort of unfold, then we'll see the 5th wave move up further there. The idea was to trade to the 8,000 and get out. The FTSE's in much the same as well, but the FTSE's at the medium level here, the 6,500. So we can expect a larger correction across here. And the first swings that will be across here will be from this range here. So this is group 2 here and group 1 here. The job of group 1, of course, is to hold this to the closest largest number. So a move up into here somewhere, then expect a correction to unfold through here, and this will pretty much be the range of this particular correction before we see any further upside here. But in line with the S&P 500, we can expect an A and a B and a C within this range of subgroup 2 and subgroup 1 here, and the 6,500 will be the balance line. So just give it some time to play out through here and then wait for support, but we're looking for a 3-wave swing in most of the equities, and that would bring us into Australia as well. And we can see here that this move up through here is positive, because each of these little structures here, even these little ones here, are all in little 5-wave structures. But that said, we can see that it's not really in this section here, it's not really impulsing strongly to the upside through here. It's kind of creeping, isn't it? We're kind of getting these overlapping wave structures here, so it is in its own little way a sign of weakness. And I guess that with the S&P 500 having another little push up and then having a correction as a wave 4, then we need to view this as doing the same as well here. So just be mindful of that. So a move, this 5,130 here, that's the top of group 1 here, subgroup 1. So if the price comes back down through that, then we know that we're going to see more weakness, and we can come back into the 5072 area through here just as a larger correction. That's so just be a bit mindful. If you've got profits in here from being long, I'd certainly start locking them in a little bit through here as well. If we come into the 20-minute intraday here, we can see that the positive news here is that the market is above the 5150 and it's sitting up there as support, isn't there? So even here we can see the 1, the 2, the 3, the little 4 here. So we should see a little push up through here. So it is positive. It's just if it comes back below the 5130 here, then it's there will be support there, but there will be signs of weakness there as such, But as I mentioned, you can see the little 5-wave structures in all of these here, so we should push higher. So maybe just keep a stop at some odd number under the 50 here. Don't put stops at the number 9. because 8 will have the volume there, the 5-0 and the 4-8. People think in whole numbers first, then even numbers, then odd numbers. So stops should go below 8. I used to put them at 7 a lot, but I'm just having a lot more success at using the number 6. But if under 6, the next strongest number is 5, so then you've really got to go at 3 at that stage. So 6 and 3 are the best places to have stops in most markets. Commodities. Let's have a look at commodities. Okay, this is weekly copper chart from the LME, the London Metal Exchange, and we've been looking at this triangle pattern across 8,000 through here, and we know that it's a corrective pattern because each structure's in 3 waves here, and a triangle itself is a continuation pattern of a trend. So if a trend is moving down and you get a triangle, then you'll be moving down as well. If it was the other way around, if you're coming up through here and then you had a triangle across here, then you'll be breaking to the upside because they're continuation patterns. So look, we've watched this play out through here as an A and a B and a C and a D and an E, diminishing into this particular price point through here, and we've watched the breakdown through here. Now it's on this trend line down through here, so it's just logical to expect a retest of the 8,000 there, or the supply level, maybe even 7, 8, whatever. But once that's done and dusted, then we'll see further downside through here. So that can take days and weeks to occur through there, but we would be looking at a break lower through here. But while that, if that does push up through there, I mean, the other side of this too is it can slip under the trend line through here and get a lock on the on the trend line through here, and then sort of roll down as well. But when we have a look at the US copper for the May contract, we've been counting, this is all the data I've got on this because it's off the futures contract, but we've been counting it to the downside, and we can see the third wave's always the longest and the strongest, and we've been looking for a low here. We understand that this was also a corrective pattern as well, but it has broken lower through here. So look, it may not be the case, but it's a reasonable possibility to assume that we could have a low in place now. I just thought it would have been a bit more of an impact, just a bit lower than this as it is. We can see a rally off here, but the main point is that while it is above the 350, that can be the line in the sand. So we can treat this as being positive as long as it's above the 350 there. Okay. So what we need to do now, we need to work out what we've got here. If we get an impulse wave up through here, that still may not even help us out actually, because this here can be priced out at, not priced out, but we can have this as an A wave here and 3 waves here. We can have this here as a 3-wave structure here for a B wave here, and we could have this as a C wave up here in 5 waves as well. So we could get an impulse wave through here as well. So if it's going to be any larger than that, if that's not the case, then the case will be that this structure is completed here for this 3rd wave here, and we'll be going up for a 4th wave, which will pull us up to the 4th wave of 1 lesser degree through here, and that would go up in 3 swings up there, an A and a B and a C up through here. So let's just give it a little bit of time here, but I think the main point is here that while it's above the 350 here, then we need to treat that as being positive through there as well. I'm just trying to get it on a smaller time frame here. I mean, it's just a little bit early to call it positive to the upside. Positive means an impulse wave, but it is looking there in terms of the 1, the 2, and a strong 3rd wave, little 4th wave here, and a 5th wave up. So if we do get those 5 waves up, then we're likely to get another 5 as well to follow that. So we can see that it's getting tired now, so let's just allow it to pull back through here, and let's just see how it retests and what sort of pattern that it gives. If it gives us a corrective pattern within here, then we can expect it higher there as well. But it is sort of positive in a way, and so it does help sort of support the BHPs of the world. So when we're looking at the Australian BHP through here, so I mean, it's just going to support it here. That's pretty much sort of it really there. There is a small switch pattern in here. I'm not sure if you know what a switch pattern is, but basically it's once you've got a low in here, the market will move up here, normally on lower volume, and then once we get a new low here, like this has made a new low through here, it comes down and checks where the demand is, the demand that actually bought here to create the basis for this to move up, even though a lot of volume hasn't followed it through here, because I can simply see in the ranges here that the volume as that's been moving up would have been getting less and less, but it does create this switch situation. So normally you'll take a long trade off just above that high there, so 35.91 would be the long trade set up there with the stop under here. It is reasonably high risk, but it is a switch pattern, and it's a sort of change in trend and supported by volume. So let's see if that copper pushes up. Well, then this will push up as well. We need the US dollar to roll to the downside, which actually is the case because we're expecting the euro. The euro's been rallying a little bit, but anyway, that's still very high risk at this stage. The oil market is pretty much on track. We've been looking at a rally through here in wave 4, and then once it's complete, move to the downside. So we're looking at this in terms of an A and a B, and then 5 waves up for the C, which is the 1, the 2, the 3, the 4 here, and we've had a bit of a spike in through here, but let's just see how it it's a little bit unclear, this structure through here, but let's just allow it to come deeper into this block here is the volume of supply here. So the sellers have forced that down through there, so they will still be sitting there. So let's just see how it treats itself within here, with the S&P 500 coming off that into a wave 4 to the downside. That will also help this move to the downside a little as well, but there's certainly resistance up there, and we wouldn't call this, if we were wrong, then we would be wrong, and we would take long positions once we had support above that supply zone there, which would be on top of group 1, the 3 here, 93 of minor group 1. So we're not missing out on anything through here. So we just wait for that to play out. In terms of trading at short, you would normally wait for the 90 to become retested resistance, but you probably could do it from the 91 here as well. So normally we could even just sort of start selling in here, but one of the situations is that oil can follow the stock market. So if the stock market is positive, the economy is good, they need more oil, yada yada yada. So and we expect the S&P 500 to push up further. So I wouldn't be surprised if there's more retesting in this area through here. So it's not a place to rush in. It's nice to have the S&P 500 on your side when you're trading oil, and also the euro and other markets as well. It just makes things move a little bit quicker. It's like the ASX 200. It will move very quickly if it's got the material sector and finance in the same direction. But if they're not in the same direction, then there's this pushing and pulling and overlapping wave structure, which we are seeing in the market. So, you've got to kind of consider the sentiment, so to speak. The gold market, look, it's still going sideways, but it's done the same thing as base metals. So it's had this sort of extra low through here. So we need to take that in consideration that that can be at sort of sharp shot down here, but we, like I mentioned before, we can't trade this short until we got the 1572 as a retested resistance. So yeah, and in fact, you know, while it's got support on the 1580, that is a positive. So a breaking above this little high here, that's the 1583. So if you've got retested support on 1583, you could probably go long off that there. It's high risk. This is definitely corrective across here, but I'm just wondering if this is, you know, a low point here, the rally into this point here, and this is the correction here, and then we've got the 1, the 2, the 3, the 4, and the 5 coming down through here to create a low here, and we retest back to the 1600 from here. So the support on the 1583 there, you know, so it's moved up above that, come back and found support, and then scale in, and then add on the 1585 if that's the case. So that's possible there, but keep an eye on base metals and also the US dollar as well. So let's have a look at that. Okay, the US dollar here. We've been tracking this little wave count up to look for a little high up through here at 83 here, and it would count in terms of pretty much up for 1 here, back for 2 here, nice strong third wave up through here, and then the fourth wave in here. The fourth wave normally pulls back 38.2% of the third wave through here, so that's kind of where it is here. So if we just work it to the closest largest number, the 8250 here, that's where it could possibly pull back to. If the 8250 becomes the retested resistance through here, then we would have to look at this as being this fifth wave in here somewhere, and some, you know, fourth wave in here or something like that, because yeah, that 8250 as retested resistance would sort of put a bearish bias on this market. But as it stands, we need to consider that there's one more push to here, then a larger correction from that. So we still expect the US dollar higher there at this stage. And when we look at the euro, there's, in the big picture, there's a couple of counts on the euro. One of the main things that we've got here is that with the euro here, we've got, this is a weekly chart by the way, but we've got this very clear three-wave structure up through here. So that would really make this, you know, this three-wave structure a rally of this bear market here. So it could certainly be completed at this stage here. And what we've been doing, as you know, we've been looking at 5 waves coming down through here, which is not quite complete yet, but close. And once that would be in play there, we would be calling that wave 1, and then wave 2 back up through here, which would come in 3 waves here, and then we would be looking at a wave 3, which would be down, you know, 1618% of this one here. So a long, strong move down through here. So that's a real possibility through here. There is the possibility too that the 130 here is still the support through here, and this in both cases really we get from here, we would get this down for 1, back for 2, and then down for 3 here. This is the predominant count here, and this would line up later on with the S&P 500 as well. So if this was the case here, then it would be very important for us to take a long-term short position through here for that. So we'll be paying close attention to that. The other count that's a possibility is that we get this situation here where there's actually a new high, one more new high being made through here. So this pattern here would be an A and a B and a C higher here, exactly the same as this little pattern through here. So this 3-wave price action down through here is a bit like this. So it's down through here, back up here, down here, finding support this time on the 3, not making a lower one here, and then pushing up high here. So that's a real possibility as well. So we'll be able to work that out when it arrives, but the predominant count is this situation here, and this does create good short positions here, because at this stage the S&P 500 will be finding its high on its long-term wave count. So when we're looking at the S&P 500 here, I'll have to put it on a monthly chart here so we can just get a good sort of view of it all here. We've looked at this before here, looking at tracking this top through here. So we're looking at the 1600 here, the 1618 area in through here, and what we've been doing is we're just tracking the little wave structure up through here, which has got further to go through here, but anyway, there we go. So once this S&P here finds its high here and starts to roll over to the downside, then the euro should follow that as well. So that would give us the top of wave 2 in here, or somewhere about there. So we'll have the euro and the S&P 500 doing both the same thing. So that's why it would be a really good short, and to build into short positions there. And it's something that we'll definitely be looking at if that's the case. So there is a couple of possible counts there that we need to work through, but we'll endeavour to accommodate both of them, but not forgetting that this is the main plan through here. So this structure coming down through here, if we look at that on the daily chart here, we can call it down for wave 1, or we can call it the A wave, and back for 2 and the B wave. Either way, whatever that moves up in there, that will move up in a 3-wave structure here. So what we've been doing is also counting 5 waves down through here, where we feel that there's a bit more to come in this last one through here. We're looking for just looking for another little 5-wave structure in through here to bring us into 128 or 127. So we're looking currently as a retest back up here into the 30, 50, 30, 60 sort of area there. So if we just drill in there a little bit closer, we're kind of looking at it like this here. So we're tracking the 5-wave structure down through here, as you know. We're looking for this being wave 4 here. We're looking for wave 1 here. We're looking for wave 2 to come back. Whoops, sorry, that's the wrong market here. Let me just find it. Okay, just using the 30-minute chart here. We've got this move down here, which we're calling wave 1, and we're looking for the rally. So the rally would be looking at it in terms of an A and a B and a C wave in 5 waves. And the C wave here would be the 1, the 2, the 3, the 4, and the 5, up into this 50, 30, 50, 30, 60 area here, which is basically the 61, 50% and 61.8% of this move down through here. So, whoops, I got that upside down, but the 38.2 would be the same as the 61.8, just upside down. So in that area there, so we're really looking at subgroup 2 within all of this, but what we normally look at is the level of supply here. So it would be at this here, so probably closer to the 3080 at this point here. So yeah, you can get a little long trade up through there because this is impulsing up there, and you're sitting on the right level there at top of micro group 1, group 1 being the 30 there, 10, 20 and 30 support on that will get you to the 50 there, but do expect resistance to come in through here and this little ABC correction to things. So you'll be looking for short trades in here, and because the S&P 500 has got another little push up, that's going to help the euro push to the upside as well, and then the S&P 500 has got that wave 4 that will unfold, so that's going to bring down the euro as such. The Australian dollar is on track, you know, in terms of our structure. So we were looking for the 1 hour chart here, the A wave, the B wave in 3 waves, a little bit sort of tricky in amongst here with a few news reports and things, but anyway, completing the B wave here, and now we're looking for a C wave to go to the upside. So I've got this little line here because when you're looking at ABC corrections, there's normally an equality between the wave A and the wave C. So this little line that I've taken here is just from the length of wave A here, putting it at B here. So we're looking up in this area through here. So we're looking at this little structure through here, and you can work out that obviously that we've got a little wave 1 here and wave 2 here, and the third wave is unfolding here. So we've got the top of the third wave at the once again the important 102.72 area here, the subgroup 2 area here. So this will be a little fourth wave and a fifth wave to make wave 1. So we will be looking at, if I can just draw this out, just be a bit patient. So we're looking at basically looking at a 5-wave structure to here, so we can put that wave 1, wave 2, wave 3, wave 4, wave 5, something like that, and then we'll see it move down. That will be the top of that particular structure there. There'll also be a 5 little wave structure in there as well, which we can move to the smaller chart through here, and we can pretty much say that this is wave 1, wave 2, and this is wave 3 in here. So we've got the strong third wave in here, so it would have the 1 and the 2 and the 3. So look, just expect wave 4 to be in through here somewhere, and then a wave 5 up. So wave 5 up will take us, the top of wave 1 here will take us pretty close. So it will be something like the wave 1, wave 2, wave probably 3 in here, wave 4 back to here, and wave 5 stuck into the thing there. So that will make wave 1, and then you'll have an A and a B and a C, and then we'll go further up through there. So that's be quite a good trade to the upside. It'll be better than the index at the moment. And you've got copper moving to the upside as well. So the US dollar at the 82.50 as resistance there would also help this further up to the upside as well. So just bear that in mind. Alrighty, okay, well that's sort of it. In terms of our robo trading and any other trades that you've got on the market there, you need to be a little bit cautious, because the S&P 500 will have its wave 4 back. It will create one more little high, but then it'll have its wave 4 back. So Tuesday, see a bit of profit taking, then the trend resuming. Then Wednesday is a larger swing, but also creating the high for the week normally, and then Thursday being the bear day. So really the Tuesday can collect stops, but the Wednesday more so, and the Thursday even more so once again. So yeah, just bear that in mind, and if that's the case, then perhaps lock in a bit more profit. And where to lock in profit? Well, then just look to your closest, largest whole number or even number. Alrighty, good morning and good luck. Enjoy the day ahead.